are here to present our credit research analysis on one of the most reputed telecom service providers in the country, Bharti Airtel. The agenda of the PPT would be business description and corporate governance, industry overview, capital structure, liquidity and financial analysis, key investment risks, and finally concluding with our recommendation and rating. The Airtel company started its operation in 1986 by offering push-button telephones in the country. In the year 1995, Airtel started its mobile operations in Delhi as Bharti Televentures. In the year 2003, Airtel underwent a major change where all of its televentures were merged under one brand name, that is Bharti Airtel. In 2007, it started operation in Bangladesh, and in 2017, Airtel merged with Telenor. Post-submission, Airtel also acquired Telecom Kenya. Between the year 2007 and 17, Airtel underwent a large number of small yet substantive events, which include alliance with Infosys for DTH television service and Airtel Money, launching operations in Sri Lanka and Rwanda, and in 2010 it acquired Zen Telecom Services, which helped it in expanding operations across the African subcontinent. Next up, we'll talk about the key highlights, which is Airtel has operations in 16 countries across Asia and Africa. With over 403 million subscribers, it is ranked as top 3 mobile service providers globally. It is also acknowledged as the fastest mobile network in India by Ookla for 3 times in a row. Before the merger of Idea and Vodafone, Airtel was also the largest telecom service provider in the country. There are 4 key business divisions in Airtel, the main one being mobile services and infrastructure and telemedia services, which includes the home services. Airtel has also ventured into Airtel Business, which offers B2B solutions to customers regarding connectivity, wholesale voice and data services. It also ventured into digital TV services, which include direct-to-home TV, Wynk Music and Airtel TV. The business model of Airtel aims at achieving 6 main targets, which are brilliant network, scientific sales and distribution, obsession with customers, which Airtel aims to achieve through digitization, cost frugality, driving innovation while managing complexities, and offering an open telecom platform, which not just helps Airtel in realizing profits, but also benefits new businesses budding in the country. The business model of Airtel is founded on 6 pillars, which Airtel calls as its capital. The first one is financial capital. Airtel aims at maintaining an optimum debt, equity, and internally generated cash flows ratio, which helps in achieving a long-term value. This can be seen in the EBITDA margin of the country, which is 33.83%, which is quite above the industry benchmark. The second capital is intellectual capital. Airtel believes in winning customers for life, which it achieves through its strong brand image, highly experienced people, world-class technology, and robust processes and systems. The next up is human capital. Airtel believes in winning with its employees, which it achieves through Learn, Lead, and Grow program, and offers various opportunities to its employees to follow the curve. Next, we'll talk about the manufactured capital. Airtel has operations across 8,000 towns in the country with 95.3% population coverage. It also has digital TV services in 640 districts in the country with 100% population coverage. Next is social and relationship capital. Airtel engages very effectively with its stakeholders, which includes the customers and suppliers, and follows ethical government standards. Next up is natural capital. Airtel believes in reducing the impact of telecom infrastructure on the environment and also in reducing the carbon footprint in its facilities and data centers. Its main target is resource and waste optimization, the leading example of this being when Airtel first realized its profits in African operations, it attributed this success to its War on Waste program. Speaking about corporate governance, Airtel received Level 1 governance rating for its ethical governance practices and transparent systems by CRISIL. More than 50% of the board comprises of independent directors, which is a benchmark in itself. Next up, we'll talk about the industry overview.
The story of the Indian telecom sector spans for 2 decades and is a fascinating one, and it is here to stay. With more than 1.1 billion subscribers, a teledensity of more than 90%, and 500 million internet subscribers, and an ever-increasing subscriber base, the story is yet to unfurl to its full potential. But the rural India missed the bus, with less than 20% rural internet penetration and a huge headroom for teledensity and an opportunity for the players to capture a larger market share. The industry is the teledensity in the rural sector is growing at a CAGR of around 8%. With the entry of Reliance Jio in the market in 2016, the total industry structure went for a toss. There were multiple players fighting for market share before that, but now there are only 3 players fighting with disparate growth rates. As the variable cost in the industry is negligible, the main competition is for gaining higher market share. As we can see, because of the price cuts introduced by Jio, the EBITDA, the AGR, and the ARPU suffered and have been decreasing in the past 3 years. But it is believed that the industry has bottomed out and now the ARPU will grow in around the rate of 10%. The industry has been growing for the last 2 decades, and as we can see, people were using less than 1 GB data per month in 2015-16. But now they use around 5 GB of data per month and is expected to grow to 10 GB data in the next 5 years. Similarly, the growth of the rural India's internet penetration was very slow, but now it is supposed to grow at a much higher rate. There's also been a huge change in the revenue structure for the industry. Before, the main revenue source was voice calls, but now it is data, with almost 73% of the revenue coming from 4G data. And the 4G data subscribers are also growing at a similar pace. We talked about people using data more and more, but what do they use it for? As we can see, the main use is for video streaming, which opens up a plethora of opportunities for the OTT and content creation. The mobile payment infrastructure and the industry as a whole has also been seeing an exponential growth because of the higher base of customers and also favorable government policies. So, the telecom operators can no longer be just telecom operators, but digital solution providers. It calls for a seamless integrated service. The base transceiver stations, commonly known as the towers, has also seen a significant growth of almost 40% in the past 2 years, which provides a huge opportunity for the tele-infrastructure sector in India. So what does the future of telecom in India look like? The players have to connect the unconnected. They have to redesign their business model from being just telecom operators to becoming digital solution providers. And the government policies have to grow more and more favorable for them to increase their profit margins. But what is that will help them differentiate? What is that will give that competitive advantage to that player? The main source of competitive advantage will be enhancing the customer experience. As Bharti Airtel also operates in the sub-Saharan Africa, we just have an overview of how the market looks like in Africa. With people believing that Africa is the next big story, the numbers have a different story to tell. The growth rate is slow and the penetration is low, mainly because of bad network economics. Also, we can see a similar trend of change in the revenue structure that is moving from voice revenue to data revenue, even in the African market, calling for more and more integrated service.
Now we move on to see the capital structure of Bharti Airtel. First, we analyze the debt to equity ratio. In the debt to equity ratio, we see that from 2014 to 2016, they tried to unleverage themselves, but post the entry of Jio in 2016, they weren't able to unleverage themselves and had to pick up debt in short-term form. Now, when we look at the shareholding pattern, 67% of the stake is being held by the promoters themselves, which shows their trust and in the efficient management of the firm. Now, moving to the liquidity analysis, we see that the different segments of Airtel Business and other businesses of Airtel have been posting a good growth in revenue, but the wireless businesses have been suffering decline due to the falling ARPU. When we divided this into two parts, the wireless business, we see that in South Asia, it has been declining continuously since past few years, but this has minimal effect on Airtel. In Africa, it is showing signs of revival and stability, but in India, it is declining. In other businesses, we see that the digital TV services has improved significantly, and the home services has dropped, but this is due to the availability of cheaper alternatives. Tower infrastructure and other businesses have been posting a healthy 10% growth. in the revenue and the profit comparison, we see that the profitability of Indian segment compared to any other segment is much significant, and leading us to believe that this is the profit driver of the consolidated firm. Eventually, after understanding this and looking at the company as a whole, we see that in 2014 and 2015, the return on capital employed was improving for the company because of its unleveraging move. But with the entry of Jio in 2016, they had to change their strategy from commanding a price in the market to focusing on the quality of services that they have been providing and the customer experience. To improve on that, they had to spend more on capital expenditure, due to which the net profit suffered significantly, and it's about to hit the rock bottom. In case of the return on assets, we see that the digital TV services is giving an abnormal return. This is because of the base effect and the high contribution margin that the industry has. Then eventually we see that in the liquidity analysis, the interest service coverage ratio and the debt service coverage ratio, it is of some concern. The interest service coverage ratio has been falling for the last 4 years, and the debt service coverage ratio is between 1.5 to 2.5. This is because of the high capital expenditure that they had to incur to meet customer demands and to become competitive in the market. And the increasing depreciation burden on the company and the forex losses that it has faced has reduced its EBITDA. Moving on, while being concerned about the debt repayment capability of Airtel, we applied the Altman Z-score model. Here, we made some certain assumptions. The assumptions are the following: the working capital, reserves, and total assets are the same as last year. And for the coming year, we anticipated that from the half-yearly report, 2.25 times of total sales and EBITDA numbers are reasonable. So when we ran the model, and the score that we got was 1.4 with a 7% probability of default. This is indicative of the views of the credit rating agencies like Moody's and Fitch and the concerns of the investors.
Moving to the next part of our presentation on investment risk, we have developed a investment risk matrix, and based on that, we have divided the investment risk into 3 categories, that is financial, operational, and market risk. Interest rate risk remains a high risk for Bharti Airtel, as the leverage on its balance sheet is very high, and the industry profitability and Bharti's profitability, to be particular, has declined considerably since Jio has entered into the market. Moving to operational risk, the competitive rivalry in the industry remains very high, as Jio is continuously pushing to gain higher market share, and Vodafone and Idea are merging their networks, poses a challenge to Bharti Airtel. But the price rivalry is expected to decrease to a sustainable level, as the ARPU of the industry below the current levels are not sustainable for the industry as a whole. Now, moving to the market risk, currently the ARPU of Bharti Airtel is around 104, which has decreased by around 60% since Jio has entered in the market. A further decline in the ARPU will certainly downgrade our credit rating. But as those levels are not sustainable, we don't expect a further decrease in the ARPU of Bharti Airtel. Moving to next part of our presentation, that is recommendations and ratings. Recently, Moody's has downgraded Bharti Airtel to junk category, that is BA1. We have used standard credit risk matrix to come up with a credit score of 5.5 for Bharti Airtel with BBB minus rating. This rating is based on 4 major credit risk analysis parameters. First, we expect the industry to bottom out and show a sustainable increase in ARPU of around 10% in next 2 to 3 years. Second, Bharti Airtel has done considerable capex in last year, and they have also entered into various M&A deals. With this, we expect Bharti Airtel to leverage on its capabilities, gain market share and attract new customers. The industry rivalry is also expected to stabilize, and in long term, from 3 to 4 years, we expect the 3 major players to settle for a market share of around 30%. Fourth, the telecommunication industry's overall structure is not same, was it was. Now it is a digital content provider industry, and with Bharti Airtel's dominance presence in telecom industry for last decade, it was the market leader before the Idea and Vodafone merger. We expect it to capitalize on its brand loyalty and customer loyalty and show growth both in terms of revenue and profitability. Based on this, we have upgraded Bharti Airtel to BBB negative, and we don't expect it to remain in the junk category, even in the ratings of Moody's, Fitch, and Standard & Poor's for long term.